Overall, it seems there are a lot of risks out there. Yes. I'm thinking of Italy, I'm thinking of Brexit, I'm thinking of low inflation. What concerns you the most about the health of the European economy?
Well, the biggest threat, of course, for the mere existence of the Council Union is not the Brexit, of course, but Italy. Because Italy is too big to fail. We have a populist government. You may say we have the OMT program of the ECB, yes, but there are certain conditions attached to the OMT program. For example, a country should first go to the Brussels ESM bailout fund and has to accept reform conditions before the ECB could step in. But a populist government is quite unlikely to submit to reform conditions from Brussels. Therefore, right. there is a risk that OMT in the end may not work, and this explains why investors are so nervous about Italy.
But should Brussels give a little bit of an easier time in Italy at the moment? There are, two populist governments that are trying to do the best they can, trying to keep their promises, and Italy needs to find a way of growing, and that's not through austerity.
Well, it is austerity. Sure, it is austerity.
But you can't grow through austerity.
Absolutely, absolutely. When you bring down the deficits, when you bring down the high level of sovereign debt, then the risk of a default goes away, and then confidence returns, and then you can grow. But one thing is, of course, also necessary. Italy is a very bad place to do business. According to the ease of doing business of the World Bank, Italy ranks, can be compared sometimes to emerging markets, and therefore Italy has to offer better conditions to the firms. That means modernize their economy, their courts, their legal system, law enforcement, etc., etc. And this is a way. But dishing out money in the end will depress the economy and not help the economy.
Okay, if Brussels is too hard, if the Germans are also too hard on Italy, do you worry about the citizens voting against the euro? Well,
first of all, Brussels is not tough. Brussels is not tough. We have Jean-Claude Juncker, and from the very beginning he said we are a political commission, and we are soft on rules. And we have seen in the past how soft the EU Commission has been on France. And I tell you what, when the European Parliament elections are over in late June, then this whole situation will come down, and then the populists in Italy and the European Commission, they will find a kind of fudge compromise.
The chief economist at Deutsche Bank believes that actually Brussels needs to be a little bit softer, even from what it is now, on Italy because of the massive surplus they've had in the past. Do you reject that?
Yes, absolutely. We had the same day a guest comment, and I have totally the opposite position. Italy suffers put it this way, if you look at the deficit of Italy, and adjust this for interest rate payments and for the business cycle, then you can see that there was no austerity at all over the past 4 years. Instead, the deficit has increased, and Italy suffers not from austerity, but from too much spending. This is too much spending, especially in non-investment areas.
When you look at Germany, what would the growth future of Germany look like without Angela Merkel?
Well, Angela Merkel is not very important as far as the growth outlook is concerned. Not at all, because Germany has not done so, or the German government has not done very much to improve the business conditions here in Germany. Instead, we have an atmosphere of complacency. And when you look at the
she's kept politics stable.
Sorry?
She's kept politics stable, which helps the economy.
It kept everything stable, but most of the other countries, especially in Eastern Europe, they improved, and therefore Germany is falling back in terms as its quality as a business location. This can be documented by the ease of doing business of the World Bank.